Hello, it's Big Chads, and this is part of the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to take a look at a pattern. It's a Japanese candlestick pattern called last engulfing top and last engulfing bottom. Now, you may be familiar with a bearish engulfing candle or a bullish engulfing candle, and that, very simply put, is where you have a candle, smaller candle, and then another larger candle where the candle body completely engulfs the body of the prior candle. Now, this is not to be confused with an outside bar. Let's say you have this candle here, but you have the wicks like that. This isn't also an outside bar, but let's say in the first example, this is an engulfing, but not an outside bar because the lower wick of the first candle, right, is lower than the second candle, right? So it's really engulfing refers to candle body structure. It's a Japanese candlestick term. And the idea here of last engulfing top and bottom, you can pause and read this on your own. This here gives you a little bit of the differences between regular and last engulfing. But the idea behind it is it's almost like an exhaustion move, an overextension move. So you need to reverse a trend is what it is, a reversal pattern. Here you have a move up, okay? And then you have a red candle signaling a weakening of the trend, but then the gap down and the close back up above. So you have a bullish engulfing after an uptrend, but after a red candle. So you have an uptrend, red candle, and a bullish engulfing of that second candle. And it's the idea that in this case, it started to give weakness. The bulls came back. They finished the engulfing, but there's some weakness, some latent weakness left over. You know, we've talked again like an exhaustion gap. So you have a move up in the exhaustion gap up, and then usually sends that the trend's reversing because it's gone too high too fast, right? Like a bump and run, like something where you've just gone too high too fast, and that's allowing you to reverse the momentum. So in the last engulfing bottom, we have the red candles down, right? Irrespective of candle wicks. And of course, wicks can play a role too. There's different context and nuance about upper wicks and lower wicks. I cover that in another video. But let's say you have these red candles down, and then you get this little green candle, and then another, say you have a gap up, and then another red candle. Last engulfing bottom. This would be a last engulfing bottom, where even though it's a downtrend and you have a big red engulfing, it's a last engulfing bottom because it shows an overreaction move, right? Bears have done too much too quickly, and the momentum is reversing. So you don't see it a lot, as it's mentioned here in the AI overview. It's a rare pattern. Right, it's unlike a standard engulfing. It's the second candle is the same color as the prevailing trend. Right, engulfs as a small counter trend move. So there's been an overreaction, and the trend is turning down. So you have a last engulfing top and a last engulfing bottom. And this is for the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and the Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chads out.